And I'll minimize this and get started. Well, this is the second webinar in a series. I don't know how long this is going to last. It's going to go at least 8 sessions. It might go a lot longer. We'll just see how much we get covered and how much you want to learn. I enjoy doing these, and I I learn a lot myself, to tell you the truth, because as long as I've been using HGSI, I'm still learning things about it, if you can believe that. It's been over 20 years, or right at 20 years, and I'm still figuring things out. So I can understand how a newbie is overwhelmed, and that's why I'm trying to put together files that will make this a lot more intuitive. Anyway, I want to point out a couple of things. These are the slides, and I'm going to make a PDF and send this to the people who are subscribed to get the files while I go through these webinars. Anyway, you'll get this tonight or tomorrow, and I put the playlist of webinar videos on this second page, and I just put up another video today on I redid using my spreadsheet for risk control. The old other one was pretty old, and I did a 10-minute video. I think it's pretty self-explanatory, and I think a lot of you have used the spreadsheet, but you can watch the video. I already uploaded it, and if you have the playlist link, and you should, because I emailed that out, and I also posted on Facebook and so on. But anyway, there's one page. Let's go down here. When I send this out to the subscribers, there will be a link to the webinar add-on files. It's probably best if you just go ahead and delete the webinar, the warehouse and the chart scans each time, because I make little changes or sometimes major changes. Here's the new video, position sizing with the risk spreadsheet. It's available to anybody just off of that place list. And then these are the spreadsheets. These are really powerful for position sizing. I did these several years ago, and if I had to do them today, I don't think I could do it, because I really don't remember how I put them together. And I work very little with spreadsheets anymore, but they really serve the purpose. And I think well, I know Paul uses them all the time. I think Tom and other people do too. These are older videos here. Wyckoff's basic laws of supply and demand and so on. I may redo those. I don't know. I think they still work. But as we go down through different things, why start at the top? I'm not going to do that today. I'm going to come back and talk about that, or I may interject some of it today, but I want to go through that process later, where I look at the markets and then just go top down from there. And then these are things we're going to be talking about as I go along, as I mention them, price mechanics and structure, things like that, and I'll point that out. But for the subscribers, I'm going to send this out to you so you have a reference. Also, let me see, I'm looking for something in particular here. Of course, I can't find it when I'm looking for it. Oh, it's right here. This is order flow and market sentiment PDF. It's going to be linked off of here, and it has the HGSI cheat sheet, the shape guide of the VPA flags, price analysis, volume at price, support and resistance, and then a thinkorswim VPA reference PDF, which I don't know if it matches exactly to the thinkorswim VPA, but it's close. And then these are all things that I'm going to be discussing, and this is just a reference. So anyway, I want to get that out to you. And I've set my screen up here today. If I can get back to where I was with this is going to be my daily chart on top, and this is going to be, there's your cocoa ball weekly chart down below. And then I'm going to have the warehouse over here. I've got a lot going on with this computer, even though it's last year it was a state-of-the-art computer. With all these things going on, it gets a little bogged down. But I'll be able to make these charts full size on the daily and weekly when I talk about them, so they're not scrunched up like this. But where I want to start today is I want to go back to this thing that I made that video on over the weekend. I was thinking, what drives these stocks to the top? We've for so many years we used ERG as one of our standards, earnings per share rank, relative strength rank, and group rank, to get ERG, which is the sum of those three. But I'm finding, and I've known this for a while, and I've mentioned it before, that the EPS rank really has little to do with strong stocks or bringing these stocks to the top of the list. Now, I am sorted here on the percentage change beginning of the year. And if you look right here, you can see that some of these stocks are just up tremendously. Now, this is last night's data. It's not going to include today's NVIDIA, but NVIDIA is in here. And as of last night, before earnings, it slipped down to number 112 out of 3533, and these are stocks assigned to industry groups, but this is all going to be changed. But let's just take a look at NVIDIA. As of last night, it was up 109% yesterday, and today, what's it tacked on today? Oh, I need to update my intraday. Sorry about that. I'm doing it manually because it drags down the computer more when I just let it run every 5 minutes. And as you can see, it only takes about 30 seconds to update the whole database. So we'll get the current price on NVIDIA. Okay. Well, maybe a little longer than 30 seconds while I'm recording. But I'm not going to do it again. Or I may do it, later in the video, but there's no need to update it, just explaining these features. Okay, so here's NVIDIA. Now I'm on chart number 2. I'm going to go to the intraday statistics, and if I look over here, you can see that it's up another 25.63% today as of right now, and it's generating a VPA flag which says transfer of ownership and up thrust bar, a sign of weakness. Now, most people would not consider this a sign of weakness, but if you think about it, look at all this volume coming in here, and we have a spinning top now. There's a heck of a lot of sellers in here, as there are. Who knows if the sellers or buyers are really dominating at this point. It's just kind of an indecisive candle right now. I zoomed in on that by holding my alternate key and hitting my one key. Alternate 1 gets you in to this level, and you can even go a little bit tighter by zooming. Now, actually, I guess you can. I thought I could go in a little tighter. Anyway, so that's why this VPA flag sell signal is generated, it just means beware, because there was an awful lot of short covering on this, obviously, or it wouldn't have opened as high as it did. Well, most of this gain took place after hours yesterday. But my point is, getting back to what I want to talk about, what are the factors that kept NVIDIA in the lead or near the lead for so long? Now I'm going to just move over here, and this would be the 23rd. Let's see, I need to go. Okay, this is 24th. That was the 24th. I want to get rid of today's. So I'll just go back one. And this is the way it was setting up or moving up for quite some time now. And some of the rules are a stock will continue to trend, or it hasn't changed trends unless there's a series of 3 lower lows. And maybe in this instance that was not a lower low than this one right here, and this was the first lower low, that was the second lower low, and then it moved up. This would be a first lower low, then a second lower low, and this could have been a third lower low right there. But these are just general rules. These are rules that a guy named Frank Bunn came up with, and generally they're pretty good rules, but they're not written in stones. But when you look at a candle like this, and you look down here, you can see, even though this looks very ominous and dangerous, and it gave an effort to fall, look at the volume was light on this. So this is VPA, I'm sorry, right here. Look at that, below the 90-day moving average. Volume price analysis, that means we should be looking at the price and the volume at the same time. Now, to put this stock or any other stock in context, I'm using chart number 2 here. I call these context charts because, and I went over this last time, but I'm going to keep going over them because this information is very useful. What context is this? Well, the context, and let's disregard that last candle. Let me get over here. Okay, so what do we have here? These pullbacks using my 3-6 method are actually buying opportunities as these dip down below. The 3 goes down below the 6, and you can see it here in the histogram. It doesn't mean to buy on that day, but it's a warning that it has pulled back and it could be setting up with a low pivot. And on this day right here, that is a low pivot because this tail is a little bit lower than this one, and for this to be purchased, and most of us are not going to go out and purchase a $272 stock. I know some of you do, but if you want to make that huge capital investment, you can do it. But you can also play these with debit or credit spreads, or you can just buy options or calls outright, which is generally a losing position unless you get in on a nice move up. But as I said on this chart, and I call it my perfect chart because it does most everything I want it to do, these are opportunities. So getting back to the original thought of today, what drives these stocks higher to the top? And my conclusion is, when I mentioned in the video, that groups have a lot to do with it, but I started thinking about this, and the groups, some of the stocks may not be in the correct group, or they're in a group where, there are similar stocks to what they do, but they're not exact. I mean, there are so many different group methods of ranking and categorizing groups out there on software platforms. It's really hard to get them into a specific niche. So you have to be careful about them. Generally, they're very close in all these programs, but they will differ. I mean, a bar chart will differ a little bit from thinkorswim and so on, and it's just the way it is. So I thought maybe a better way is to use a comparison to the S&P 500, because that's a broad index of stocks rather than just a an industry group. But we can use both. So what I am experimenting with, I thought maybe I'll show you a filter, how I created it, and how I can locate, or how we can locate these really strong stocks. So I went ahead and pre-built the filter, and I just stuck it up here in these group inclusion report scans. This is where I've done a lot of experimenting in the past, and I just have something called strongest performers. I'm going to edit it right now, and I want to show you what I came up with. And this, I just did this today. It may not be what I end up with, but first of all, I think these factors are very important. We know that relative strength is one of the best comparisons. Now you say, well, relative strength, what does that mean? It means it's a comparison at a point in time with all the other stocks in the database. So if the market's really weak and everything's going down, a huge sell-off, there are still going to be stocks that are relatively stronger than the rest of the market, and those are the ones we want to be looking at. So I decided that for this experiment, maybe we would limit this to stocks that are just in the S&P 500 and the NASDAQ 100. Now, HGSI has this great feature, is it's a group membership. If a stock is a group member of either the S&P 500 or the NASDAQ 100, it's going to be in this list. Why did I want to do that? Because this is where the institutions are. This is where the action is. Now, this is just for this filter as an example. An RS rank I put in here. Now, this is HGSI's RS rank. 40% of the rank is on the last quarter, and the other prior 3 quarters or 4 quarters, or 3 quarters, I'm sorry, are 20-20-20. So that's 60, that's 100, equals 100. Kirkpatrick's is based upon a 26-week moving average of weekly closes. So it's a different way, but I like to use both of them. And I've got these columns, let's see if I can see them in here. Well, right here. Here's the relative strength rank for HGSI, and then Kirkpatrick, not all of his meet the criteria. So, maybe it's a little bit stringent, but I'm going to leave it at that right now. I'm going to take a look at this here. Let's do a preview. How many, do you build filters or not? I know some of you do. Anyway, rather than using the industry groups, which bounce around too much, I thought a nice compromise is a 21-day change versus the S&P 500. It's a broad-based institutional index, and if you have greater than 1, which means, and 1 is the standard for the S&P. If it's greater than 1, it's outperforming the S&P, and you can see in this column right here that these are all outperforming the S&P. And then I put a institutional requirement in here, 50% institutions, and you can see that's right here. And then I wanted a column showing how close these are to the 52-week high. And here's the way you do that. You put the percent 52-week high, percent close to the 52-week high, and then an either or in here, 0, because what I wanted it to do is just show up in here. I don't want it to be a factor in the filter itself. So it's just visually, and then I can sort in here and see how close these stocks are to their 52-week high as of last night. Okay. Okay, did you get that, Tom? Okay, well, and you know, this is something I'm working on. But one thing I really want to point out here is that the erg, and let me apply this filter. Okay, and the EPS rank, look at the, this is updating still, or look at the EPS rank. That's this column right here where this hourglass is. Look at all of those that are red. It's really a non-factor. So if people have been screening for strong stocks based upon the erg, I just don't think you should do it. But if you're comfortable with that, if you're looking for a more balanced stock, like here's Chipotle, then it's 82, 95, and 90 for 267 erg. The minimum erg, some filters are based upon, or like erg 240. But once again, like I said, the EPS rank is really a non-factor. In fact, let's go to NVIDIA. Look at this. EPS rank of 13. Relative strength rank of 96. Kirkpatrick, 99. Group rank of 65. This is why I didn't want to use the group ranks, but I wanted to use the percent compared to the S&P 500. Now, I'm going to make a quick group of these stocks. I'll just call it top stocks. It takes me a while to get through these webinars when I want to show you this stuff. So like I said, I don't know how many of these webinars I'll do. They may go on for, how about indefinitely? No, I can't do that. Anyway, here, number 6 here is a performance versus the S&P 500 over a 21-day period right here. And remember I said if it's above 1, it would be included. So here's a 21-day change, and this is as of last night. So AMD outperformed the S&P by 28%. Big number. Let's take a look at AMD. And at this point, this is my context chart once again. What's the context? I want to try my new drawing tools I had to pay for because Camtasia wouldn't put them in, but that's fine. I'm getting used to them and they're kind of fun. So here is, I better get a color I can see, right? And I want to make that smaller. I'll clear the screen. That's whiteboard, not clear screen. You'll have to bear with me until I really get familiar with these drawing tools. And I'm going to do this. There's, like I said, the 200, the 100, the 50, and the 18. Now isn't that slick? Those arrows just disappear on me if you use this setting. And then, of course, this is the gap up today, but I'm talking about the performance versus the S&P 500 up to this point. This is another example of a strong chart. I need to get up here. That pulled back, the group pulled back, and it pulled back here too, and you can see that the 3 was below the 6 the whole way here. It popped above it right here, but the 6 wasn't above the 18, so this was an initial move up, and then there was a gap down on who knows what news. And then we started seeing some positive VPA flags, and right here is where the 3 crossed the 6. Why do I keep bringing this up? Because none of these stocks that are leaders now got to where they were without the 3 crossing above the 6. And the really strong stocks, you'll see the 3 above the 6 for a long period of time, like right in here, and the 6 will be above the 18, and the 18 will be above the 50, and the volume point of control will be positive. Plus, there will be these blue marks where it's above average volume compared to any down volume days over the past 5 or 10 days. So this is very effective to see where the demand is supporting these moves up. It's always scary. What you're trying to do is look for these crossovers with 1 or 2 day, and when I run these scans, I give you these scans. There's a 2-day window on these crossovers. So here's a crossover. It would have shown up here also, and when you do that in conjunction with an effort to rise, that's a powerful signal, and it took off. Now let's just move up to 1C. This is another chart I put in for this webinar series. This is the comparison to the S&P 500. If you go over here, see that. And then the cyan is the industry group, just like in the other chart, and the green is the strength versus the industry group. So back here, when this started moving up, the green was moving up, which means that AMD at that point was outperforming its group, and it was also outperforming the S&P 500. So this is a good chart. This is just 1C, how you can get a feel for the strength of a stock, and you always want to look for outperformance. The best stocks outperform the broader market and the group and have a high RS rank. So that's excuse me a second, I need a drink. So if you were to use this filter and just look at these stocks every day and look for, let's go up here. I'm just going to go into my, I work better with a quick pick. I just go into my number 1 folder. These are all, I'm going to explain all these, and I may get to those next today. I just go to the end of day scorecard, and I use these columns because this tells me exactly what's going on. For example, well, let's click on this one. What's as of last night? What is the longest running stock with the 3 above the 6? It's Microsoft, followed by NVIDIA. NVIDIA crossed over 20 days ago. Remember, 0 is a crossover day, but the VPOC only crossed over yesterday. Why? Because there were some sellers. I need to drop down to my next chart. Right here, going into earnings. They didn't want to hold it going into earnings, and they wish they would have today, but you never know. It could go either direction. That's why they call it earnings roulette. So where was the crossover for NVIDIA? It looks like probably right here. This may have come, it did come down, it looks like. But once again, what was the volume like? Look at that. That tells you that there is very little interest in selling NVIDIA on this day. So always take the volume into account. Now, like I said, this is a very expensive stock. There aren't many people that are going to lay out $300 for 100 shares of a stock like this. But who's playing this stock? I know some individuals do in the group, but it's mostly institutions. And when these dip down here, that represents a buying opportunity. Now, like I said, one way you can play this without risking too much money is with debit spreads. And I don't know what it looked like on that day back there, but if you can buy a 5-point wide spread for 250 or 260, you've got a chance of hanging on to it. You buy 30 days or 45 days worth of time, and there's a good chance you're going to make 50% on that trade. And later in the webinar, we'll get into doing some debit spreads. I do them quite a bit because at my old age, I'm less risk averse than I used to be. And that's maybe because I'm going to be 78 here in a month or so. But anyway, I like debit spreads. Why? Because you can still play these stocks. You can still participate without taking on a tremendous amount of risk. If you want to limit your trade to $250 or $500 and you have some time working on your side along with a trend, there's a good chance you can come out all right on these. The best part about it is you know your risk. Your risk is defined, okay? Any questions? We'll get into that later in the webinar series. But these columns right here, I can't emphasize this enough. I look here a lot. Here's the relative strength right here. Here's the Kirkpatrick right here. These are stocks that have pulled back. Apple pulled back 2 days ago. Let's see what it did today. I don't know. Okay, perfect. This is a buying opportunity. Pulled back here. You can see it's 3's below the 6. It's going to cross. Today, not as of yet, it's not crossing. But this is a good example of a pivot, a low pivot, based upon these 3 bars. First, I want to get a line here. I don't want the timer. Hold my shift key and draw this across here. You can see where support is on here very clearly when you just look at a naked chart like this. Where's resistance? Well, it failed. It broke resistance and failed, came back down, but it held at support. So this would be a pivot because this pivots here. This candle's high is higher than this candle, and now this candle took out this, so this would have been a buy at this point right here today. So that would have been a fill. Once again, you can play this if you want to play Apple. It may or may not go. I'm not guaranteeing anything. Volume is really light on Apple today if you look down here at the bottom. But that's a good place to do it, and your stop would be just below the yellow line. Okay, I need to get back here. I'll just leave those on there. Let me just for fun. This is the spreadsheet I used for the video I made today. And let's let's just put Apple. AAPL. I want to capitalize that. What am I doing wrong here? I hit the wrong key is what's happening. Okay, so it fills Apple in here and it fills Apple in here. And this is the 10-day average true range calculation. And this is just the risk level calculation, which I would be using here. Now let me clear the screen. That's not letting me clear it for some reason. Let's do this. Okay, and then I'm going to bring up, like I said, I'm still getting used to these drawing tools. So let's bring up the R tool or the risk tool. I better leave that full screen. And I'm going to, I'll use yellow. I'm going to put it at this low point right here. And then the buy point would have been clearing that by a couple of cents. It's right there. But look at the risk. It's only 1.68% using this tool. And Tom, you had a question about this tool. If you click on this arrow and you want to reactivate it, then you can put it anywhere you want to. And you can drag these over so it's a little bit clearer over here. Okay? And let's just put these numbers in. 173.89. And I need to bring that back up. 170.51. Okay, so you can see right there where the risk is, it's only 1.98%. But if you're only risking $250, you can only buy 72 of these shares of Apple. And, that's all right. Now look over here. It says if I bought 125 of these, I'd be risking $430. That's why I'm limiting myself to 70. Well, let's just put it at 72. And now you can see that it drops under 250, 247.68. Where's my stock scorecard located? Paul is asking. Under my daily prospecting scans, it's number 1. I may try to organize these a little better as we go through, but I go down this list every day. I don't use every one of them every day, but when I put out that non-index files, I go down the list and I look at these things. So that's why they're as they are now. Let's see what I do with my spreadsheet now. Okay, so you can, if Apple continues to go, it goes up every point up, every point down, $72 now. Your target, if you want to make one risk out of this, or one reward, I should say, the high is 173.89. If it gets up to 177.35, you'd make $250. If it gets up to 180.79, you're going to make $500 at 70 cents a share. Or you can come in here and change this capital amount to $100,000, and then you can buy 500 shares. No, I'm sorry. You're risking $500, and you can buy 145 shares. So it's very handy, and it lets you know exactly how much you're risking, and if you put your stops in. I know a lot of people don't like to use stops, but for your initial risk, I think it's always wise to use a stop. Now, when you start making some money on a stock, you can just put alerts in, or you can trail a wide stop or whatever. But on the initial risk, I think you need to. And I'm not going to go over the ATR. You can watch that video that I made today. It explains the average true range, and it also explains the probing shares if you don't want to go in and take a full position at the open. You can do 20, 20, 20, and 40 if it's moving in your direction. And just another way to do it. So I've tried to cover quite a few contingencies here. Okay, so these are stocks. If I let's make this large like this and go back down to number 2. I just want to flip through these quickly, and I'm going to put this on 2, alternate 2, and you can see on every one of these stocks that there were buying opportunities based upon the 3 below the 6. Yeah, when they come down this hard, they aren't a high relative strength stock. But as these stocks gain momentum and start going above these moving averages, especially if you have some VPA flags in here too, and then you get an effort to rise with the pocket pivots, the volume pocket pivots, the blue boxes, and the volume point of control, that's an alert signal to go in. And these scans that I have will show you a 2-day window on these when the 3 is crossing the 6. So it would have picked it up right here, and the 6 also, the 18. Let's just flip through these very quick. Whoops, I missed one. Wow, that's NVIDIA. You've already seen this. AMD you've seen also. Salesforce. Lots of little dips here as it worked its way higher. Netflix, loose. This is an awfully loose stock. But once again, I'd never play this with a capital position. It would always have to be a debit or credit spread. It's just too loose. Broadcom, look at this thing. Wow. I know there aren't many in the group here that are going to lay out $600 a share, and I don't think these are very liquid on the options. I'll look at that some other time. Meta platforms. Look at this. Buying opportunity here. Buying opportunity here. Look at all the continuation buying. Had this dip down. Then the volume point of control went positive. 3 went above the 6 again, and it just keeps moving up. I guess I don't have to go through all of these. Geez, it's already 2:44. I know these webinars we're going to be doing more than 8 of them because I've got an awful lot to cover. Anyway, any questions on that? Do you believe that the 3, 6, and the other crossovers are a good way to prospect for stocks? I mean, I do, because it's a trigger, and we need a trigger. Okay, let me show you a few other things today. Was there anything else that I mentioned prior that you want me to cover a little more? All right. Let's do something here. I want to show you this. I'm going to update the intraday now. I had to take a drink there. Let's see, what's the... well, Apple's up $1.94 now. I think the 3 is crossing the 6. Okay, so that's updated. Now I'm going to go into the designer. And I'm going to locate the industries. And I'm going to use this tool under the Tools menu, saying rebuild indexes in group. What we're going to do is we're going to look at the stocks and the groups that are moving today. So all this updated stock information that I just downloaded is being built in to these industry groups. I can tell that there's a load on this computer. Now I'm going to do one more thing. I'm going to rebuild my user smart groups, which are down here. Normally when there's no load on this computer, this takes between 20 and 30 seconds. So it's going to take a little longer than that now, but not quite finished. The hourglass has to run through its process. And another reason it's slow is I have two charts open here rather than one. And these charts, I have a lot of things built into them, and it takes a little calculation. Normally, I'll just have one chart up, and then I'll go look at the weekly charts too. By the way, I'm not on weekly, am I? Yes, I am. Okay. Anyway, now I'm going to get rid of the designer because the way I've set this up is with these, I'm going to take you through the whole top-down process as we go along in these webinars. But if you go down to these, I want these as part of the top-down process. This is the end of day Woodward and Brown smart groups in here. So you don't have to go to the designer to look for them. They just pop up right here. Let me sort on raw combo. And this is the way it looked last night. This was, well, actually the industries reflect the current data, but in the morning, if you do this, this is the way it looked last night. This is 1 day and 5 days, and you can see what the dominant groups were. Now, I'm going to just disengage the combo because I'm sorted on the industry percentage price change 1 day. I want this to stay in this order, so I'm going to disengage this. And now I'm going to drop down to intraday. What this does is it keeps these stocks in the same order, and it tells me if they followed through today, and obviously AMD followed through today. And let's go back up to the end of day. You can see AMD is right here. The combo, which is the industry percentage price change, is disengaged. When I go to intraday, these groups are still in the correct order, and I can see which of these follow through. If you do this 10-15 minutes after the market opens, you can see what's working if they're continuing to work. Now, down here, these are stocks $1 to $15 sorted on industry groups, and here's what they're doing intraday. You can see that a lot of these didn't follow through. Okay, that's A, and these are the downside. Okay, both up and down. This is the way it looked last night. B, this is the way, well, let me reverse this. I'm going into C right now. I just rebuilt the user smart groups and the industries, and this is what these look like as of 2 minutes ago. This is $15 and up. All of these stocks are up, and this is what the groups look like. You can see the semiconductors as of my rebuild a few minutes ago were up nearly 9%. All the money's flowing, well, a lot of money is flowing into these groups. Semiconductor devices and manufacturing. Look at the percentage price change here. Look at the range. I mean, there's no selling going into the close. Well, we're real close to the close. So there's very little selling here. The volume here, some of them have much higher volume. But this is where the strength is today. Now, if I go down to this one, these are $15 and up. I want to show you something else. So this is right now. This is what's happening now. And we're in all securities. If I want to look over here and I want to go into the major market components, I want to know how many of these stocks moving up are in the Dow Industrials. 1, Microsoft. How many are in transports? 3. You can see right here that they're up. How many are in the NASDAQ 100? 17. How many are in the OEX? 11. So you can really isolate this intraday stuff if you're interested only in these groups. This is a semiconductor SOX, which contains both devices and manufacturing. And this is obviously where the strength is today. But you don't have to use all securities, but when you revert back to all securities, I'm going to hold my alternate key and hit the space bar. And Paul wanted me to show you this. See, we've got 11,503 securities. That's because the filter is not engaged. You just come over here, just to the right of the finger, click on it, and re-engage it. That re-engages this group of stocks that are up today. Now let's look at this a little bit closer here. These columns right here that I keep harping on, you can see how fresh or how old these signals are. And let's just go down here to VMware. 0 days. VPOC crossed over yesterday, but the 3 didn't cross the 6. But I bet it has today. And there it is. So alternate 1 gets me in close. You can see that the 3 has clearly crossed the 6, and there's an effort to rise on VMware. And you can see that this poked its head above, the histogram poked its head above, and the volume point of control poked its head above. Now I want to, am I confusing you, or does this all make sense? I hope it makes sense. Okay, now I want to show you something, this volume point of control. There's documentation on how it works, but I put a, if you go in here on the new files, number 13, I'm just going to go down to number 7. This orange line here represents the volume point of control. And you can see it corresponds to the green down here. So when the bulls are taking over based upon a 10-day period, and I'm going to go up to the prior chart. This shows the 10-day period. The longest bar represents 10 days. And the volume that, for example, on this white candle here, all of the volume, because it crossed these 3 bars, is assigned to these bars, and that's why these green bars here are longer, because there's a white candle. It's a close. This close compared to this close compared to this close, and when the closes are higher, all that volume is assigned to these buckets. So that's the volume point of control. Oh, let's see, it went negative here because this close is lower than this, and this close is lower than this. And these are pretty heavy volume days. So all that volume was assigned to the gray side or the negative side. And then it reversed here because it just was barely able to get back above that orange line, and it turned green. So the bulls were regaining control. Now I hope that didn't confuse you, but it's a little bit different. to figure out, and but it works. I mean, it's like the force index. It tells you when the bulls are regaining control. See, these are very narrow candles right here, and the 3 was below the 6, but these are closing in the upper part of their range because this closed higher than this one, and this closed higher than this one. All that volume is positive volume assigned to these buckets. So I'm putting the buckets in the new files and volume under volume point of control. There's a bunch of other buckets in here. I'll maybe go over those someday, but this is the clearest way to show it, I believe. Now I'm going to run out of time here pretty soon. And I want to show you something else that I put in here I'm experimenting with. So does everybody understand how to build these intraday and to see where the action is? I think you probably do. You can come back and watch this video. Now this is something I'm experimenting with at night. This is D, end of day undercut, setting up after a pullback. And this is, let's go to the scorecard. No, I got all messed up here. Sorry about that. Let's just make this full. Okay, so these are undercutting at the end of the day, setting up after a pullback, which means that the 3 is below the 6 if you look at this column right here. And then I just put the intraday in the same view, and you can see which of these are following through the next day. So here's one that's up 20% today. And I have no idea what the news was on this, but here is where that scan picked it up. There was a strength seen returning after a downtrend and then the gap up today. Here's a confirmation, but also a warning because of the excessive volume. But it picked it up right here, the scan did, and there was a pocket pivot yesterday. Was it earnings? Okay, thanks. I thought maybe there were, but I didn't know. Let's see here. Anyway, let's go back here and let's look at some others. Let's just do this. Here's one. How about Meritage housing stock? So you can see it pulled back both on the 3 and the 6 and the volume point of control 8 days ago. Let's see how it looks today. My purpose of putting these in is to give us a list of 25 stocks, and I can expand that list if people want me to. And just looking for relatively low risk trades. So what's the context of this? Well, the fan is still up because the 50 or the 18's above the 50, it pulled back, effort to fall. There was pretty heavy volume, but then there was an inside day yesterday when this was generated, and today it's trying to get above, but it didn't. So that's the context of it. What's the risk? Well, if you were to take this trade, I'd put the stop in below this. I would use that tool, put it at that level, and then let it take out that high, which it did, and then it fell back a little bit. But this is adhering to the rules of the filter. So the 3 is below the 6, and I allowed the VPOC to be positive. It doesn't have to be, but I allowed it for the very reason that I just showed you on that volume point of control chart. That if the bulls are in control based upon the 10-day period, there's a good chance it's going to go up. Now here's one where the bulls have been in control for 14 days. Clear back here. And then even on this big move down, with that volume spike, it wasn't enough to shift the volume point of control to negative. So it has remained positive throughout this. And the 3 has actually stayed above the 6 from this point right here. It was setting up yesterday with a low volume test. It tried to go today, but it didn't get out of there. But these are stocks you can put in a watch list. One more and then I'm going to end this. Okay. This is end of day. The 3 crossed the 6. You can see looking down this column that these crossed yesterday. Which of them followed through today? Well, these that are green followed through today. The other ones failed. This one failed by 10%. I said I was going to quit, but I didn't mean that. I have one more folder to go. Okay, now remember I just rebuilt my user smart groups. And this is intraday setting up after a pullback. My reasoning here is, and I looked for 25, but I only got 19. This can give you a clue as to which stocks may be going tomorrow. Here's a couple of home builders right here. Well, let's sort on this. 2 home builders. And I looked at Meritage. Let's look at this one, Tyler Morrison Homes. So here was the setup. This is why it was generated yesterday, and it didn't go today, but it's setting up, and this is the context is these stocks are in a strong uptrend. And then I did the same thing with a crossover from yesterday, which are going up today. You can see this list of 25 is only 7. And you have to bring them up to see it went, but selling, it was sold into. Let's see if we can find one that, well, this one's still setting up, or this could be a buyout, probably a buyout. Paul, did you buy this one today? I think you did. I thought you mentioned on the Skype board. I was looking at this one because I believe it came up at the end of day in the other scan too. So this one's setting up nicely with 3 VPA flags, a low volume test today, and the 3 crossed the 6. Good. No, see, that's a really nice setup with the fan and the 3 pulled down below the 6. Nice setup here. The VPA flags came in. This is closing near the high on each of these. The volume point of control turned positive on this one right here. So BRBR is the symbol on this one. Okay, so I put those in. We'll cover these more in depth every week, but I want you to play with them and see what you think. And I'll try to come up with more ideas, but I think this is a really good start here. And then I'll take you through the whole top-down process maybe next week, looking at the market, ETFs, HGSI indexes, and then go through these stocks and groups. But stocks and groups and ETFs are going to tell you where the strength is. You know, indexes are fine. They give you a general view, but we really need to dig down into the stocks themselves and these indicators, the 3-6 and the VPOC and so on, relative strength. They give us a really good idea of where the strength is in the market. Okay, any questions before I go? I want you to all have a safe Memorial Day weekend, and I plan on doing the same thing. Okay, no questions. All right, well, let's shut it down then, and I'll see you next. I'll put another video out. I mean, I don't know if I'll put one out Memorial Day or not. If not, I'll put it out on Tuesday. I'll think of something that I want to cover. And we'll let these sessions go as long as we get to the point where I think I've covered most things and I've answered all the questions. Okay, well, thanks for attending, and once again, have a safe weekend.